Isaac Newton changed how we understand the universe. He explained gravity, motion, light, ideas that still shape modern science today. But there is one area where even Newton failed. Not physics, not mathematics, money. This is the true story of how one of the greatest minds in history lost a fortune during one of the biggest financial bubbles ever recorded. By the late 1700s, Isaac Newton was already a legend. He was a mathematician, a physicist, an astronomer. His work laid the foundations of classical mechanics. His book, Principia Mathematica, changed science forever. Newton was not only respected, he was powerful. He served as president of the Royal Society. Later, he became warden and then master of the Royal Mint of England. This role made him responsible for the nation's currency. Newton understood numbers better than almost anyone alive, and for many years he was financially careful. But history would soon test something intelligence alone cannot control: human emotion. In the early 1700s, England was deeply in debt. Years of war had taken their toll. To manage this debt, the government supported a private company called the South Sea Company. In exchange for taking on government debt, the company was promised future trading rights in South America. The potential sounded enormous. In reality, trade profits were limited, but public confidence grew rapidly. Shares in the company began to rise. Newspapers wrote about it. Pamphlets promoted it. People talked. Many believed this company represented a new era of wealth. Like many others, Newton invested. At first, he acted rationally. He bought shares early. Later, he sold them at a profit. Newton made money, and he exited. By all logical standards, this should have been the end of the story. But the story did not end there. The price of South Sea Company shares kept rising. Friends, colleagues, members of high society, many appeared to become extremely wealthy, at least on paper. The higher the price went, the harder it became to ignore. Newton watched from the outside as others seemed to gain far more than he had. Eventually, reason gave way to pressure. Newton re-entered the market. This time, he invested far more heavily. He was not alone. Across England, people from all backgrounds rushed in, driven by hope and fear of missing out. The price continued climbing until it didn't. In 1720, confidence suddenly collapsed. As doubt spread, investors rushed to sell. The share price fell rapidly. What had taken months to rise collapsed in weeks. Newton tried to hold on, then he tried to sell, but the market kept falling. By the end, Newton had lost a sum equivalent to millions of dollars in today's money. The exact figure is debated by historians, but the loss was enormous by any standard. For a man who had calculated the motion of planets, the outcome was deeply personal. Newton never publicly invested in the stock market again. Years later, Newton reportedly said, "I can calculate the motion of heavenly bodies, but not the madness of people." Whether recorded exactly or paraphrased, the message is clear. Markets are not driven by intelligence alone. They are driven by emotion. The story of Isaac Newton is not about failure. It is about limits. Even the greatest minds are human. Even logic can be overwhelmed by fear and social pressure. Financial bubbles are not created by ignorance alone. They are created by optimism, confidence, emotion. Newton's story reminds us that understanding numbers is not enough. Understanding ourselves may be harder. History doesn't repeat itself exactly, but human behavior often does, And sometimes the most valuable lessons come not from success, but from mistakes.